Welcome to Manifested e-learning platform. Today we continue the series Trade Association, Amateur Sporting Association and the Club. And we start with taxation of the trade association. So number one, you need to understand that trade association are basically engaged in activities of protecting and fighting for the rights of its members. Essentially, when you talk about trade association, that basically the income generated is not basically meant for, it's not known to raise revenue. It's raise revenue for, for trade. So basically it's being exempted from tax. So we say that this is an association, this is an association, this is an association, an association, this is an association of members, association of members, we say association of members, or persons, engaged, we say engaged, association of members or person engaged, in activities, we say in activities of what you call protecting. In activities of protecting, we say protecting, promoting, protecting, promoting, and fighting, and what you call fighting for the interest, and fighting for the interest of its members. So this is basically what the trade association are geared to do, promoting, protecting, and fighting for the interest of its members. So trading association, trade association are essentially not taken, not to carry out, not to be carrying out, essentially they're taken to be not to be carrying out, income generating activities. They're taken not to be carrying out income generating activity. And therefore, they are exempted. We say exempted from tax. And therefore, they are exempted from tax because they're known not to carry out activities that are generate income. So examples of trade association, you can say examples include. The examples of a trade association are Kenya Association of Manufacturers, include Kenya Association of what you call manufacturers. Association of Manufacturers, then we also have the COTU. So these are examples of what you call a trade association. Those are examples. However, if this trade association are precisely maybe engaged in activities that generate income, they should report that to the Commissioner of Domestic Tax. And that should be taxed at a corporate rate of 30%. We have said that trade associations are known not to engage in trading activity. But I'm saying, however, if they engage in income generating activity, then that needs to be reported to the commissioner, and that will essentially be taxed at 30%. So we say they are required to notify. Lastly, they are required, we say required to notify. They're required to notify to the commissioner, they're required to notify to the commissioner. We say they are required to notify to the commissioner. they are required to notify to the Commissioner of Domestic Tax of domestic tax, of the domestic taxes. They are required to notify to the Commission of Domestic Taxes, in which they are required to notify to the Commission of Domestic Tax if they are engaged, in income generating activities. However, they are required to notify to the Commission of Domestic Tax if they're basically engaged in income generating activities, in which case we say in which case it should be taxed. It should be taxed at a corporate, what you call corporate rate of 30%. In which case, if they're basically engaged, they need to report to the Commissioner at corporate rate of 30% on their taxable income, on their taxable income, on their taxable income, on their taxable income, on their taxable, on their taxable income, on their taxable income. They're known not to engage in income generating activity, and so therefore we know they're exempted from tax. However, if they engage in income generating activity, that needs to be reported to the Commissioner, and that should be taxed at 30%.